Welcome to AM Best Audio.
Operating performance for the U.S. health insurance industry remained favorable through the third quarter of 2024, although underwriting results have been pressured by Medicare Advantage and Medicaid managed care results amid increased pharmaceutical spending. Here to discuss the health insurance industry as part of its annual review and preview are Joseph Zazzera, Director, and Jon Housel, Financial Analyst, AM Best. And Jon, starting with you, AM Best put a negative outlook on the government program segment last year. How do you see the segment performing over the next couple of years?
Well, Medicare Advantage plans have been increasingly popular for our senior population and now accounts for more than half of all Medicare participants compared with traditional fee-for-service plans. In recent years, Medicare Advantage growth can be attributed to newly aged-in members, and this growth is expected to continue, as it is estimated that more than 11,000 people a day will turn 65 through 2027. However, insurers have reported increased claims related to these new enrollees, who had delayed necessary procedures, including higher-cost orthopedic procedures such as knee and hip replacements, to take advantage of the enriched benefits and the lower out-of-pocket costs that Medicare Advantage provide. Health insurers also face pressure on the regulatory front, as the average star rating has fallen annually since 2023, when 68% of plans were rated 4 stars or higher, and in 2026, it is expected to be right around 40%. On a positive note, CMS released its 2026 advance notice, and the preliminary rates are favorable when compared to recent years. Regarding Medicaid, carriers recorded substantial enrollment growth in the aftermath of the pandemic due to the lack of Medicaid eligibility redeterminations as a result of the public health emergency. Although companies were prepared for an eventual decline in enrollment once redeterminations resumed in 2023, the majority of disenrolled members tended to be healthier, resulting in a higher acuity in the segment. Necessary rate increases have lagged the acuity level, which has led to margin pressure in this segment. However, Medicaid profitability is expected to improve in 2025 and into 2026 as rate increases are implemented, which reflect the acuity of the current population.
Now, the commercial segment is doing well compared to previous years. What's driving that turnaround, Jon?
The commercial segment's premium revenue has grown consistently in each of the past 5 years, a trend that continued through 2024. Favorable premium development was supported largely by premium rate increases in the group segment and both premium rate increases and business expansion in the individual line. The enrollment growth has been driven by individual line of business due partly by members shifting from Medicaid to ACA products due to the before-mentioned Medicaid redeterminations, as well as an increase in the ACA subsidies as a part of the American Rescue Plan Act of 2021 and the Inflation Reduction Act of 2022. Commercial premium expansion is expected to continue through 2025, driven by enrollment growth, rate increases, and strong retention. However, there's still some concerns regarding some regional, smaller, and less diversified health plans in that segment.
Customize your data experience. BestLink now offers an interactive company dashboard that provides company-level intelligence in a fast, user-friendly interface featuring interactive tables, charts, and Sparkline performance histories. Customize the dashboard tiles to prioritize the insurer ratings, data, and analytics that best support your workflow. AM Best. Our insight, your advantage.
Joe, the report discusses the rise in pharmaceutical costs as being a concern. Can you discuss that dynamic for us?
The increased patient acuity and a rise in overall national health expenditures has been leading to a rise in medical and pharmaceutical costs, as well as an increase in claims incidence and severity across all business lines. Escalating drug prices remain a primary concern, and were one of the top rising costs for health insurers in 2024. This has been driven by the introduction of higher cost pharmaceuticals, including biosimilars, gene and cell therapies, and other injectable and infusion type drugs, and of course the rapid increase in the popularity of the GLP-1s, which the report actually talks about some of the dollars around that. Insurers have tried to manage prescription drug costs through providing guidance for appropriate use by directing patient sites of care and limiting GLP-1 approvals and use to the primary meant use, which is diabetes and not for obesity. But in 2024, the rate of increases in pharmacy claims was double digit and accounted for 13% of overall medical claims. Additionally, the rate of change of pharmacy claims has increased every quarter in 2024. It hit 18% in the third quarter. And the total prescription drug spend in the U.S. has grown to about 33% over the last 5 years and 150% over the last decade. And with the growing new drug pipeline for 2025, this is likely to make pharmaceutical spend an ongoing concern for the industry in the near term.
Now, AM Best has a stable outlook on the overall segment. Is there anything that could tip the scales one way or the other as far as that's concerned?
AM Best expects that the overall industry will remain profitable, but with lower margins, as John talked about. Challenges in the government lines are expected to persist in 2025. Several large carriers have reported that challenges in the government business could linger into 2026. Operating results for Medicaid managed care, while a challenge, should improve somewhat, as John mentioned, this year and into early 26, largely due to rate increases that have been implemented. For 2025, health insurers have also implemented corrective actions on Medicare Advantage, which include rate increases, benefit design changes, and exiting certain markets or geographies. And on the commercial side, fully insured business has generally generated strong results for the large group business and individual business, and many are very bullish about what this year holds for commercial. So AM Best will continue to monitor the ongoing operating financial trends as 2025 progresses, but worsening of any or a combination of these observed negative trends in 2024 could result in a revisit of the outlook.
Thank you, Joe. John?
Thank you.
Thanks, John.
That was Joseph Zazzera, Director, and Jon Housel, Financial Analyst, AM Best. You can find the full report online at ambest.com. For AM Best TV, I'm John Weber.
Looking to get the full attention of the insurance industry? We have the platforms that will do just that. Whether it be AM Best TV, AM Best Audio, Best Review Magazine, or Best Day. Find out more by calling AM Best Advertising Sales at 908-439-2200, extension 5399, and have a great day.